Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, April 27th, 2010. This morning we're talking about no resolution, and we're talking about the Greek crisis. Now, this G20 meeting that had all these finance ministers together in Washington, D.C. from around the world, that ended yesterday, and there was some hope in the market that somehow these guys were going to be able to come together and help prod and promote the situation so that a resolution would take place. Well, that didn't happen. Now, nobody was expecting the G20 to come up with plans here, but they were kind of hoping that because this is a world crisis that something would happen as a result of this, but as of right now we have nothing. So this has prompted one analyst to say that while Greece burns, Germany's fiddling, and what that means is Germany still hasn't quite stepped up to the table, and they're kind of been backing away back and forth with this problem with Greece with the bailout, and now it's starting to spread a little bit. Bond yields are going up. Portugal's seeing higher bond yields, which means it's harder for them to borrow. It makes it more expensive. Sometimes it could push it to the point of economic not being feasible. So we're going to have to see what happens. But that's the major risk in the market, and as a result, we're seeing risk aversion this morning. Now we can take a look here at some of the different currency pairs. First, let's look at the Euro USD. As you can see, we're back down towards the bottom of the range. Looks like 132 is going to be that psychological support down there. But if no resolution occurs, we could see the euro go lower, and depending upon what happens, this could spiral out of control. So we're seeing some risk aversion. That means Japanese yen is higher as people unwind carry trades. So let's take a quick look here. Look at the Aussie yen here. Okay, we see a nice little down bar right there, and we see the stochastics about to cross over. What this is showing is that we're seeing some unwinding of carry trades. Now, most people, Aussie yen is the biggest yield differential out there, so you see a lot of demand for yen as people try and get out of the riskier assets. But Australia did have producer price numbers come in. They were up at 1%, which is showing that there may be some inflation going on, and they may need to raise rates again. So the Aussie's actually hanging in there a little bit better than, say, the CAD, the Loonie, and also the Kiwi. Now the Kiwi, they're going to have their interest rate meeting tomorrow. Let's take a quick look here at the Kiwi USD. You can see they're going to come out with their interest rate meeting. They're not expected to raise rates. There was some speculation that perhaps they would signal that they're going to be raising rates soon, but in light of the increase in risk here, I don't think we're going to hear that. So we're going to have to see what happens. But that's what's going on now in the UK. The pound's given back some of its gains. Let's take a quick peek here. Look at pound dollar. Pound's given back some gains. They just had their home loan figures come out. They were a little bit less than expected, showing that that the housing market may not be as stable there as should be. So we're going to have to see what happens. But basically, risk aversion day. Stock markets are down. Commodities are down. Dollar, yen are up, and that's what we're seeing. So it's hard to tell what's going on, but we're starting to see inflation creep up a little bit, but we've got these risk themes in the market, which is causing people to get out of the riskier assets and move to the flight of safety of the US dollar, and there's demand for yen because of the unwind of carry trades. Now in Japan, they're actually they have good corporate earnings right now, so showing that they may be recovering a little bit, but we're going to have to see what happens. So there's a slew of CPI figures due out this week in the Eurozone, as well as US, Australia. So we're going to see some figures coming in, give us an idea of where they are in global inflation. But right now, I'm not seeing that anybody's going to make a move on rates, and until this Greece situation and the euro structural problems get resolved, we're going to continue to see risk in the market. So that's what's happening today. Keep an eye out for any news that something's come out of this situation, but barring that, we should see continued risk aversion. Good trade into all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com
to get started today.